Welcome, focused learners, to this explainer. Okay, so tax season for assessment year 2026-27 is officially upon us. Now look, if just hearing the phrase income tax filing gives you that familiar knot of anxiety in your stomach, I want you to go ahead and take a deep breath. Today, we are going to conquer this together. We're going to break down the entire process of filing your ITR-1 into super simple, actionable, and visually clear steps. You're going to leave this explainer feeling completely empowered and honestly, totally ready to tackle your taxes.
So, are you ready for the July 31st deadline? That date is looming large, and it is the strict cutoff for filing your individual return. Now, I know deadlines can instantly create a sense of panic, but we are going to completely diffuse that anxiety right here, right now. I promise you a quick, highly structured, and totally stress-free walkthrough of the filing process that will have you good to go way before the clock runs out.
Okay, let's dive into this. We're going to break this intimidating process into 5 straightforward steps. Welcome to tax season. Gathering your essential tax documents, figuring out if you're actually ITR-1 eligible, navigating the e-filing portal, and finally, e-verifying to finish the whole shebang.
Starting with step 1, welcome to tax season, where preparation is absolutely key.
Look, preparation is really just about getting your documents in order and understanding a little bit of the terminology so you don't get spooked right out of the gate. For example, when you start filing, you're going to see Section 139(1) staring back at you. Now, that might sound like some complex legal jargon designed to trip you up, but it's actually incredibly straightforward. Selecting this simply means you're being a responsible taxpayer and filing your return on time, before that July 31st due date. That's literally it.
Moving to step 2, your essential tax documents, or as I like to call it, the Holy Trinity. Here's the secret. You really don't need to do complex math or be an accounting whiz if you just gather the right documents first. They do the heavy lifting for you. So you must gather these 3 specific items before you even begin. First up is your Form 16, which you get from your employer. You're going to want to pay special attention to Part B of this form, because it explicitly shows your salary bifurcation and that 75,000 rupee standard deduction. Second is your Form 26AS, which is basically your master log for any tax deducted at source, or TDS. And finally, you have the AIS and TIS, which you can just download directly from the income tax portal.
Now, what's really interesting here is that AIS, the Annual Information Statement, this isn't just some basic form. It's a highly comprehensive view of your entire financial footprint for the year. It actively tracks things you might honestly just forget about, like that hidden income from your savings account interest or maybe some fixed deposits. Checking your AIS ensures you don't accidentally misreporting anything that the tax department already knows about. All right, step 3. Are you ITR-1 eligible? Let's check your status.
Eligibility is actually the biggest hurdle taxpayers face before they even hit the portal. You have to make absolutely sure you're using the correct form, because using the wrong one means your return gets deemed defective. Let's treat this like a simple grocery list, okay? Let's check these boxes together. You can securely use ITR-1 if you're a salaried individual, you own no more than 1 house property, your total overall income is strictly under 50 lakh rupees, you have absolutely 0 business income, and your long-term capital gains are under the 1.25 lakh rupee exemption limit. Check all those boxes? Awesome. Rest assured, ITR-1 is exactly the form for you.
But wait, before you proceed, you're going to hit a major fork in the road. The old tax regime versus the new tax regime. According to the latest rules, the new regime is now the default option. It gives you lower tax rates, but it severely limits your deductions. The old regime still allows for those traditional deductions we all know, like investments and rent, but you have to actively choose to switch to it during filing. And hey, a critical warning from the source material here. If you have business income, which by the way includes stock trading or F&O, switching back and forth between these regimes is severely restricted. So definitely choose wisely based on those documents you just gathered. On to step 4, navigating the e-filing portal. Time to execute. All right, let's head over to the official e-filing portal. You'll log in securely using your PAN and your Aadhaar credentials. Once you fire up your ITR-1, you're going to notice a genuinely amazing feature. The portal generously pre-fills about 99% of your data based on those documents we just talked about. But listen to me carefully here. Pre-filled data is great, but you are the final auditor. If your employer made a typo or a bank reported something incorrectly, the ultimate responsibility for verifying and fixing those numbers lies entirely with you. You can't just blame the portal if the final numbers are wrong. Once you're inside the form, you're going to see a flow of 5 specific tabs, and they actually progress incredibly logically. You start with step 1, where you just verify your personal info and identity.
Then, you confirm your gross total income in Step 2. Step 3 covers your total deductions. Step 4 tracks all the tax you've already paid via TDS. And finally, Step 5 calculates your total tax liability, which is basically your final bill or your refund.
Now, zooming in on Tab 2, this is the most critical section for verifying your gross income. This brilliantly illustrates why we gathered those docs earlier. You must cross-reference and match your salary number exactly with what's on your Form 16. You also need to declare your house property income. And yes, actually, you should report it even if it's zero. Then declare income from other sources, like that sneaky savings interest we found in your AIS. Finally, double-check your exempt income. For instance, if you have agricultural income, it absolutely has to be under 5,000 rupees for you to stay on this ITR1 form.
So as you click through to the final tabs, you might realize, oops, you owe a little extra money. Pay very close attention to this crucial piece of advice from the experts. Pay any self-assessment tax before hitting submit to avoid Section 234 backdated interest penalties. Basically, if there's a shortfall, meaning you owe more tax than what was deducted, you absolutely must use the ePay tax feature on the portal to clear that balance first. If you just go ahead and hit submit with dues still pending, you're going to be hit with backdated interest penalties under Section 234. No one wants that.
Oh, and a quick heads up. When you're checking that final tax liability, you might notice something slightly weird, say a random mathematical difference of 10 rupees. Do not panic if your math is slightly off by a few bucks compared to the portal. The income tax portal mathematically rounds your tax dues to the nearest 10 rupee increment. So that minor rounding difference, it's a built-in feature, not a bug.
And finally, Step 5, E-Verify to finish, the final step.
Okay, so we've verified the data, we've paid any dues, and we've confidently hit submit. But I cannot emphasize this enough. A filed return is not a finished return. 30. That right there is a strict countdown. Taxpayers have exactly 30 days to e-verify their return after they submit it on the portal. The absolute easiest way to do this is by generating a simple Aadhaar OTP. If you fail to verify within these 30 days, your return is legally considered completely invalid, like you never even filed it at all, and you'll be treated as a late filer subject to penalties. Seriously, do not skip this step.
So your return is filed and it's verified, but let me leave you with one last provocative question to make sure you are 100% covered. Have you downloaded your acknowledgement yet? Because honestly, the job isn't truly done until you have downloaded that specific ITR V acknowledgement form as hard proof of filing for your own personal records. Make sure you hit that download button. Do that, and you are fully prepared to conquer this tax season with zero stress. Thank you so much for tuning into this explainer, and here is to happy hassle.